Hi, this is Thierry Samlal from PMML. Today I'm going to present you the market statistics for the month of April 2023 for multifamily in the province of Quebec. So rent renewals have been given to the tenants, they've been confirmed, and now the rents are stabilized for the rest of the year, and the owner of different multifamily assets can now refinance their assets, and this is what's happening on the market right now. So we have a phenomena which is boosted by two different factors. The first factor is the capacity to raise the rents this year is higher than the previous years because of what the Tribunal Administratif du Logement has given as far as parameters for renewals. Also, we have the MLI Select program right now, which is helping the owners to be able to finance their assets on amortization periods of 35, 40, 45, and also 50 years of time. This permits higher amounts in financing and also is helping to maintain the values on the market right now. So all across the province of Quebec, we have had a drop in transactional volume. We have also had a drop in value that has been transacting money-wise. So we're seeing a drop there, but we're seeing very experienced buyers on the market right now. And I can tell you that at the moment that we're speaking, the quantity of accepted offers we have at PMML is way above average. So what we're seeing is we're seeing more experienced buyers on the market. People are less looking to flip, more to detain on the mid to long term. How could they purchase an asset? How could they refinance it at a good value? Let's start by the island of Montreal. The island of Montreal, as you know, as I just told you, the volumes have dropped. In the 50 units and above category, the price per door has dropped about $20,000 in average. So we're at an average of about $205,000 per door, which is still historically high if you're looking at 2020, 2021. As far as a comparison. Now the cap rates are compressing. We're down at 3.85 for that category, which is an increase basically in the cap of about 0.05, meaning what? Meaning that most of the assets that are being sold now require more renovations and optimizations than what we've been seeing before. I'm not seeing this as a factor of the capacity of financing the assets. Basically, what I'm seeing is I'm seeing assets which need more renovations being transacted right now, and that's why the cap rates are compressing. For the rest of the categories, 5 to 11 units, we're comfortably at 196 in average per door, and to 12 to 24 units, a little lower, and the 25 to 49 category in the island of Montreal is overperforming. We're at an average of about $161,000 per door, which means an increase of 2%, which is not that much. But what we're seeing right now is, since there's not many 50 units and above available in the market, we're seeing buyers looking for 50 units and above, going down to the lower category, wanting to inject their sums on the market while it's nice and stable right now with interest rates high, but on the stable side, to go into 25 to 49 category. But we're also seeing buyers which have smaller assets, say from 5 to 24 doors, that are willing to go up in the 25 to 49 category. So we have two different buyer bases, the larger owners, the smaller owners, all wanting to buy in the 25 to 49 category, which is definitely helping to keep the cap rates at about 3.8 right now in that category also. Let's go see the national capital of Quebec, Quebec City, and let's go see what's going on there. So Quebec City right now, we have a lot of construction going on the Lévis side of the river. We also have a lot of assets which have been changing hands in the past 2 to 3 years. We have a major owner that's been selling a good part of his assets right now to a private owner. And this is influencing our database right now and the statistics that we have. So we have 7 sales in the 50 unit and above category, which is pretty extraordinary. We're seeing a lot of change in hands of owners in the Quebec City right now. The average there for the 50 door and above category is about $145,000 per door, and the cap rate is about 4.27. So now the cap rate is slowly changing in Quebec City, and the way I'm seeing it is now we're selling more and more renovated units in Quebec City, and that's playing on the cap rate right now, which is at about 4.27. For the rest of the categories, we're between 116 to 125,000 per door in Quebec. Now let's go towards Gatineau, Ottawa region, basically, mostly Gatineau for the transactions. So in Gatineau, we have 5 transactions in the category 50 door and above that are influenced right now by the construction of newer assets in the area. That's why the average price per door in Gatineau is high at about $262,000 per door with a cap rate of about 4.05 to 4.1.0, which is a great cap rate for slightly renovated units. So we're seeing that there might be less value adds in the existing buildings for rent increases in Gatineau, but with the large influence of newer assets, it's definitely making a big difference on the market right now. The rest of the cap rates are between 3.9 to 4.21, which is pretty much standard. Now let's go to Sherbrooke. Sherbrooke Learning University City. Not a lot of transactions be above 50 doors. That's normal. Not a lot of were built in that area. 5 transactions in the 25 to 49 door category. We have increases in prices per door all across the board, except for the 12 to 24 category that sank about 5% to 106,000 per door. But rule of thumb, Quebec City, the average price per door is 100,000, and that's pretty stable, and it's probably going to stay stable for a long time. 4.33 to 4.39 cap rate, and in the 25 to 49 door category, a little less than 4. That means buyers are really aggressive in that area right now to buy. Let's go see, I want to talk to you about 3 top transactions. One that was done by the government subsidized semi-private purchase that was done recently for 40 doors. What we're seeing is we're seeing a lot of social housing and affordable housing purchasers on the market right now. There's a large demand for that. Although the MLI Select program is helping a lot of private owners integrate social housing in their portfolios, we're seeing para-public and government subsidized organisms buying right now in the market. And we're seeing this across Canada also in other provinces. I'm speaking to my colleagues, this is happening also. Second transaction I want to talk to you about is Montreal North. Montreal North remains high volume, very interesting. Assets were mostly built in the 1960s, 1970s there. We have a concrete asset here that went for $160,000 per door, which is a good performance for Montreal North. There's a lot of inventory changing hands right there in Montreal North, and you'll see a lot in the next few years. Why? Because they built a lot of multifamily assets, which remain in good condition, even though the clientele there, that's a little bit more rough and tough compared to other sectors. Also, I want to talk to you about a transaction that took place in Thetford Mines, which is completely south, close to the US border, in the eastern townships, completely south of Montreal. This transaction went for about $68,000 per door. The reason why I want to talk to you about this transaction is you're going to see in the suburbs and all the areas which are between an hour and a half to 2 hours to all major cities, transactions taking place in the multifamily asset category. Why? The owners are becoming older and they're slowly letting go of their assets. You're also going to see new construction being built across the province in smaller towns where requirements for the necessity to have apartment units which are good, clean, new for the older clientele is important. So if we sum things up, the transactional volume is dropping. We're seeing the average volume in dollars dropping also across the province, but we're maintaining our statistics cap rate-wise and price per door-wise. Why? Because MLI Select program is there and they're helping us to refinance our asset and finance new assets and maintain our values. Also because of what Latal put in place as far as rent increases this year, we're able to counteract any effects that we would have on the rise of interest rates. So that's my sum up for this month. PMML.ca for all of our opportunities out there. The PMML index, type that into your Google search bar and go see our statistics, which are up to date daily. Also, landdev.ai, which is our dedicated land site. We wish you best of luck in your businesses. Take great care.